Happy Tech Tuning in 21. I'm Chris Bettis from Fluent Mortgage. Man, I'm excited to turn back. As promised, once a month as a group, LendingPad from the Facebook, we come together, some newbies and then some people with experience, and we just share, right? So we've been going stage by stage by stage. So at this point, we hit settings, and then we're gonna talk about literally how to tailor and craft and make your own custom fee worksheets. So if you ever use Brand X, Calyx Point, right? Old school, pretty broken. I used it for years. It used to be the best like 20 years ago. You had to make a template literally for every single lender, every derivation, every product, like over and over and over and over and over. What's amazing with LendingPad is it's rules-based, right? So smart, so like today's technology. So literally, you just create if-then statements, basic, easy. So before we get very far, let's do this. All the stuff we know we usually need to do, just out of habit. We got to name everybody in case it. Sign everybody really fast, and we'll pick a lender. Since it's VA, I'm going to choose my favorite VA lender right now. Freedom Mortgage. Okay, we'll just save that really fast. My rep's Joe Rizzo. What's up, Joe? So what's cool is this pulls in automatically. Thank you very much. LendingPad, the 915. The Advantage credit already set up as a default. It knows that Freedom has a flood cert of $18. The VA funding fee, he actually has service-connected disability, so we'll pull that out of there. And then it's pulling in a lot of my defaults, right? I've already set these defaults up for my company as a whole, so let's save that really fast. We'll look how to play with defaults. And actually, let's get rid of that service-connected disability while we're at it. Or excuse me, the funding fee, they've got SCD, so that goes away, yay. $14,000 swing. But we go to disclosures, right? So within disclosures, here's how you do it. So at this point, it rightly did it, right? Freedom's underwriting fee is $915. Again, smart tech. So all we got to do, because I've already programmed it and said, hey, if all of a sudden we go no cash out refinance, streamline, right? The Earl. What's it going to do? So remember, if this were Calyx Point, it'd have no clue what was going on. You'd have to manually assign it yourself. So in this, you just do is there any default fees? If you notice, it just changed the appraisal fee. So we had an appraisal fee, it just took it to zero because no appraisal with the Earl, right? It's just smart. The other thing, let's reset the default values. And it just saw, oh my gosh. So for Freedom, I have a rule that says be smart. If it's an Earl, a streamline refinance, no cash out, automatically switch to $199. It did so. Because it's a refinance, either cash out or not, we have a recon fee of $200. Because it's a refinance, my settlement fee went from half of whatever calculate based on the loan amount to just $325. Simple. Additionally, that $100 additional cost for the mortgage recording is gone. So it's just smart. I even have the rule-based setting, and we change it every single month, how much months are reserved. So like, it's so smart. Thank you, Wes. Thank you, LendingPad. Like literally, because I use my defaults and my rules, it's just done. Literally going from purchase the way it came in to picking the right product, done. So how do we do it? Let's do this really quickly. The settings, we're literally gonna go through all these, so I'm excited for next versions or episodes, we'll call them, right, of tech tuning. So let's play in this first one, origination charge. So we literally did this as a group. So if you want additional data in the future, if you want to be a part of it and get some additional insight beside this shorter webinar, really, this is a blessing back to everybody. It says, hey, here's just a recap of what we did, right? So default, this is how you pick what items are going to show up in your good faith estimate, in your TRID document, in your fee worksheet. So if you want a more robust list and you do tons of fields every time, do your thing. We have a more abbreviated list of usual so that when we get in there, anything that's there, we know we're going to fill in. So I have a very short default list, whether or not you're going to include it in the APR or not, if there's RESPA codes. So this is what we were playing with. So we basically, for this new borrower, played with these. So we said, hey, since we were playing with VA, purchase And then Earls, we came out, freedom automatically comes in. I just showed them here's how you set your rules. But again, thank you, Wes. The 915 automatically comes in. You don't have to do that. Looking at the if-then statements. So you'd simply add a default value, right? You pick your dollar amount. $199 is what we did there. So now we'll dig into what was actually done. So you simply add a new group, okay? And then you have a list of things that are available to you. So the 3 that we did as an example, we just said, hey, if sorted by lender is freedom, loan types VA, so anytime we hear freedom and VA, and the purpose is rate and term, no cash out refinanced, Earl. So anytime we hear an Earl from freedom, you need to say 199. So again, you can just list any lenders you use, any of the fees, so automatically the system will say, oh, that's brand X, we're going to 595 or whatever, right? And then someone asked me to, because they do a ton of jumbo loans, they just said, hey, another rule thing, if all of a sudden we hit a loan over $1.5 million and the lender happens to be Rocket, Pro, TPO, or Quicken Mortgage, we need to switch this to $15.95. So literally, check this out. Any derivation you can just make, right? So for $1, it drops to $1. You can do percentages like of loan amounts, total loan amounts, whatever you want. You can code it any way you want. So most of your fields, most of your primary identifiers can be used as a sort group. You can do it based on exceptions, all sorts of stuff. So based on the field and the identifier, you'll have a ton of different qualifiers. So thank you, Wes. Thank you, LendingPad. I'm so excited to go back through and literally kind of, with lender by lender, just create my rules. So literally, smart forms, it'll do it automatically. And then the next version of this, once this is done, remember, what's the end game, right? It's not just this tech, it's integration, it's creating the perfect ecosystem. So I know for some of you are like, no, I have a different method, or we just do this or that. The reason I'm building my templates, the reason I want my if-then statements built is because once we fully integrate the ecosystem and all this, because we already have bidirectional. Just so you know, if you don't know, we literally have bidirectional between Loansify and LendingPad. The POS and the LOS literally talk both ways because it only goes one way right now, right? So all that's happening is POS to LOS, and then LOS has to push to a CRM. Well, for those of you who don't have CRMs, your POS is going to communicate and do the majority of what a CRM does for you automatically. So we need to create the rules. We need to create our templates so once it pushes all data back, not just milestones at first, but in the future, literally digital end-to-end, all of our fees come firing through so that when we go to the website, right? When they actually start tailoring themselves, this is live, by the way, this is real today. And we say, hey, I'm shopping for a VA loan. What can I get? Not only does it give you rates, not only does it give you how much cash back, but literally it'll tell you cash to close. And then on the spot, that borrower can tailor based on the cash back and the payments themselves. Sweet. Okay, there it is. So it's seriously, immediately, hey, we're going to VA, right? So we're looking at a VA 15, VA 30, no money down. Let's just play with the 30. So for example, and so here's why I'm saying we got to do our templates, right? So this is live today, like literally live today. Clients can shop on my website, on your website. Literally, we've integrated this. So this is lender HomePad and lender price integrated together. Literally live today, rate card done. I know it says mortgage insurance, that's gonna fall off. We'll get homeowners insurance. But again, the reason why we need that is not only will they see refund, but they'll literally see cash to close. So it'll pull it in, true cash to close. Like, what do clients care about? Payments and cash to close. Like, that's it, it's over. Nobody has this, nobody anywhere has this that can shop the entire nation. Or they could just say, hey, you know what? Instead of you only covering $1,300 of my closing costs, I want you to cover $8,600 of my closing costs. And in front of them, you can say, yeah, and I mean, why not? For only, $89 a month? Heck yeah. Let's save you $7,300. And then again, because we've done this, because we've done our fees, because we know exactly what it is and to pull it through with this particular lender that's already built in, right? Like this lender, we know who they are. They already pulled in their fees. Like literally we could have cash to close. And so very cleanly, here's your payment. Here's your cash to close. Pick it here. You want to have a little cash to close or you want us to pay everything? Done, sent, integrates directly into your POS, pulls through, loans tailored before they even get to you. That's the next stage. That's why we tailor. So not only is it faster within here, not only is it instantaneously clean, not only is it smart and you can't misquote, but think next iteration. Think the perfect ecosystem. So, hey, to tune in your tech, don't forget to like, don't forget to subscribe, don't forget to share. Please, most of all, tune your tech. Thank you, Wes and LendingPad, for such an amazing product. We'll see you next week.